So NVIDIA, we do have a trade here on NVIDIA. I'm going to go, as I go through the charts, I'll go through the trades so that if there's any questions that you have about trades that we took. So we took a 180 right here, 180, 175 call debit spread. We put that trade on a few days ago. And so now we're right at it, right? 185, 181, sorry, 180, 175. We took that when price was up here at 185. I didn't want to take the 185.80 because it was at the money and it was way too expensive. So I had a choice, a couple of things I, could have done. But rather than get the 185.80, I went the next leg out of the money, which is the leg in the trade, meaning went to 180, 175, put it all the way out to February to give myself even more time. And then we did the 190, 195 credit spread for this Friday. So if you remember my narrative last week at the end of the week was, especially on Friday, is that on a Friday expiration combined with a Monday closed stock market, you're going to get a lot of rebalancing, you're going to get a lot of rolling of trades, and you have a ton of puts. So on stocks that were down, if you guys remember this conversation, and I demonstrated this on Saturday, stocks that had been trading lower had a lot of shorting because look what's going on. So there's a ton of puts sitting here on stocks that were trading lower. Stocks that were trading higher, like Google and so forth, had a ton of calls on them because, look at the market action, right? So people were longing these were long. So then you come to a Friday expiration, a monthly expiration, which is the third Friday of every month, along with the fact that the markets are going to be closed on Monday for a holiday. So typically investors want to pump a little bit so that if there's, 3 days where the market is closed and it falls a little bit, it won't fall too far. So you get a little bit of that. But what you saw was the killing of puts by these lower trading stocks started to move up. Higher trading stocks that had a ton of calls to kill them off, the market maker was selling those off in order to kill off the calls for the monthly expiration. Everybody get this? This is what happened on Friday. So when you get this kind of scenario, these stocks here, they're lower trading stocks for a good reason. They're sucking wind, and they're probably going to continue to go lower. However, this move to the upside for the purposes of killing off the puts is a fantastic opportunity for us to sell short-term premium. This boost to the upside, increase in volatility, increases premium, and we can sell credit spreads up here without the fear of, well, what if it just keeps going higher and higher and higher? Well, it most likely won't because it's been trading like this for a reason. This little pop to the upside gives us an opportunity to sell some premium up here short term and then get back into a longer term short using that money. Clear? This is what we did on Friday. So we sold some credit spreads here, like on Tesla, Meta, Google. We did that so that we could then take that money, put it in our pockets, and then use some of it, if we want to buy some longer dated short. That's kind of what we did. And you're seeing the results of that, where, for instance, on NVIDIA, let's just go over NVIDIA first, okay? So the NVIDIA trade was 180, 175 put, which we did for Fab at 175. But we simultaneously sold for, and this is for February, right? 220. We simultaneously sold the 190, 195 call credit spread and got 45 cents for it. And that was for this Friday. So that if price stays below 190, we get to keep that $45 as it'll expire worthless. Or in a drop in price further away from that 190 strike, you could buy back that trade for maybe 10 cents. So if you can buy it back for 10 cents, you made 35. And now you're out of the trade and you can reduce the cost of this trade from 175 down to 140 is one way of looking at it, right? And then as you have a price or a cost of 140, you then can look and see as price drops here today, what do we want to do? What do we want to do with it? I'm sorry, I got these numbers wrong. And nobody called me out on it. That's unusual. This was $65 credit for the call credit spread. So again, if we got out of it at 10 cents, this would be actually, we'd keep $55, which would bring the cost of this trade down to 120. And then you could look at, well, how much could I flip this trade for, right? Right now, we're now in the money, but the drop really helped put this thing over the top. So what could we sell this thing for right now? If we wanted to sell the NVIDIA spread right now, we probably could get, at the time that I posted, like 220. So if you paid 140 and you could get 220, that's pretty good, especially in one trading day.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.